Welcome back, everybody, to the Peer-to-Peer Policy Pod. We are back with an action-packed week. And just a programming note, we will be taking a little hiatus and retooling the pod over the next couple of weeks. So this is a bit of a season finale, not the finale, but just a little bit of a break after this one. So we hope you enjoy this. Please send us your feedback on stuff that you want us to discuss in the future. But in the meantime, we're going to try to fix the whole national debt in a 1 hour podcast. So let's see if we can go about doing that. And we'll highlight some of our best wins over the last year or two. Again, as sort of a season finale here. But Sam, where do you want to dig in first?
Yeah, so much to dig into for our season finale today. First of all, we got a new setup. I feel like a veritable news anchor here. Kind of fun. I miss the little couch I would sit in before, but I like this as well. And just so everyone knows, we are not sponsored by the drinks that we consume during this podcast, but they're pretty tasty nonetheless. But Brian, like you said, we're going to dig into the national debt today and potential tools that we could use to defease or slash the national debt. And one of those tools is, of course, Bitcoin. This wouldn't be a Bitcoin podcast otherwise. Many people who've followed us closely know that we are truly living through the golden age of digital assets right now. Around this time last year, the Bitcoin ETF was approved by the US government. That sent Bitcoin soaring over the next year. But the winning didn't stop there. Later in the summer, President Trump announced that if he were elected, he would create a national Bitcoin stockpile. And just last month, he made true on his promise by introducing an executive order to truly create a strategic Bitcoin reserve. This is on top of repealing SAB 121, which allows banks to custody Bitcoin and other digital assets. There's so many victories occurring right now in the Bitcoin policy space that it's left people like you and me, Brian, asking what's next? How can we capitalize on this positive momentum? If we already have the United States trying to stack Bitcoin, where do we go from here? Well, we actually received the answer to that question, what's next, this last week. The answer is BitBonds. So BitBonds are Bitcoin blended bonds. Let's dig into BitBonds today, what they are and why they're needed and why they could potentially be a huge asset, not only in stocking the strategic Bitcoin reserve, but also in reducing the national debt. So to set the scene, let's talk about the financing wall that the Treasury is facing right now. So if you could pull up the first chart, Dylan, this gives some of our listeners a taste of just how much money needs to be refinanced over the next 3 years just to pay our treasuries. And so about $14 trillion of refinancing needs to take place over the next 3 years to continue issuing our government debt. Now, that is an enormous number. It really boggles the mind in many ways. And so what Secretary Bessent and President Trump right now are trying to do is lower the yield to make it easier to refinance that debt. He said it's one of his top priorities as Treasury Secretary, and President Trump is supporting him in this effort. So as a result, we've seen a lot of shakiness in the market lately because in order to reduce the yield on US Treasuries, you have to give people an incentive to flock to US Treasuries. It's often seen as a safe harbor during times of economic turbulence. And so we've seen over the course of the Trump presidency, in just 2 months so far, the US Treasury yield for the 10-year Treasury note has come down significantly. If you could pull up that next chart, Dylan. So by the time that President Trump was inaugurated, the yield was about 4.75%. It's already down to about 4.15% as of yesterday. Now, the big question is, how can we get the yield down even more? And what role could Bitcoin play in all of this? This is where Bitcoin blended bonds come in. And Brian, we've talked about a lot of policy ideas related to Bitcoin on this podcast, the strategic Bitcoin reserve being foremost among them. In my opinion, BitBonds might be even bigger. It's one of the most compelling ideas to come out of the Bitcoin space in years. So let's talk about what they are. And this is a big shout out to Andrew Hohns. Andrew Hohns is a PhD economist and the head of New Market Capital. He really knows his way around finance better than most people in the TradFi industry. And he's also started to dip his toes into alternative finance with Bitcoin. He, at the Bitcoin Policy Institute Bitcoin for America Summit just a few weeks ago, unveiled the idea and the dynamics and structure behind a BitBond. So if you could pull up that first chart, this gives us a good visual representation of what a BitBond is. A BitBond is like a typical treasury note in the sense that 90% of it funds the government. And 10% of it, though, this is where it gets interesting, 10% of a BitBond purchase goes to actually purchase Bitcoin. So the idea behind BitBonds is inspired in many ways by MicroStrategy's corporate bonds that are linked to Bitcoin. If you can offer people the opportunity to get in to buy a corporate bond, or in this case, a government bond that has a guaranteed yield, even if it's a really low yield, but also has significant upside with Bitcoin being linked to it, the demand for it is absolutely massive. So taking a note from the corporate world, the idea behind BitBonds is that they would have a very low yield. A 1% yield is the theoretical idea here, as opposed to a 4.5% yield on your typical 10-year treasury note. So already, if you can issue a substantial number of BitBonds, let's say in this instance, $2 trillion, then you can bring down the borrowing costs that the government has for its treasury notes by hundreds of billions of dollars over the course of a decade. Now, one note I want to make with the slides we're about to show is that the New Market made very clear in these slides that this is proprietary information. And so we do know, though, that it's now public because these are the same slides that Andrew used during his announcement about BitBonds at the BPI Summit, which was later aired on YouTube. But this all goes to New Market Capital and Andrew Holmes and the great work that they're doing out there to flesh out this idea of BitBonds. So let's go a little bit deeper into the saving side of what BitBonds could do for the government. If you could pull up that next chart, Dylan. So as I said, your typical 10-year treasury note has about a 4.5% yield, but BitBond, if demand is high enough as many expect, will only be about a 1% yield. That's the proposed yield. So that gives you an annual savings of $70 billion a year, which over the course of a decade amounts to $700 billion in savings to taxpayers. That's an enormous amount of savings that could really make a real impact on the national debt. And if you could pull up the next slide as well, Dylan, this gets into the different benefits of a BitBond and who wins. Who wins with BitBonds? Really, everybody. Let's get into it. The government saves $700 billion over the course of a decade. And then the investor, the bond purchaser, they also get risk-free upside to Bitcoin because it's guaranteed, because it's US Treasury note, that the principal investment will be returned to the investor at the end of a 10-year period, in addition to the 1% yield that they'll get every year. And not only do they get the 1% yield, they'll get a certain side of the Bitcoin appreciation over the course of the bond's lifetime. And so what this does is it allows both the government and bond purchasers to get exposure to Bitcoin, because the government can then take a portion of the Bitcoin used to purchase the Bitcoin in the BitBond at the very beginning to stack the strategic Bitcoin reserve. As many might remember, the departments of Treasury and Commerce were directed by President Trump to find, quote, budget neutral ways to acquire more Bitcoin. And this might be the most compelling budget neutral way to do so, because not only does it allow the government to stack sats in a very easy way, it also allows investors to get risk-free upside to it. Now, that is the basic overview of what BitBonds are. And Brian, I know that was a lot of information. It's something we've talked about a lot, and we're just really debuting the idea in full here on the podcast. But to start, what do you make of this whole idea? It's a big one, and I'd just be curious to get your thoughts.
Well, it's huge. I mean, it would essentially fix inflation. It would forestall the coming debt crisis that we all see on the way. It would help sort of cement the government's financial position and be a good investment instrument for people, for families alike. So it really is revolutionary. I mean, decreasing the borrowing cost from 4.5% to 1% or less would go miles down the road of fixing our debt problem. And we have a test case. We have now numerous test cases in the corporate bond market, MicroStrategies being, or now called Strategy, being the most pronounced example. They have issued billions and billions of dollars of corporate notes that are at 1% or less in terms of the rate. So, and the demand has been oversubscribed, I think, every time they've done it. Our employer Riot Platforms did one. It was oversubscribed immediately. Some other companies in the space as well. Now there are foreign companies starting to stack sats and build their own Bitcoin treasuries. So we're seeing this happen, and frequently politics is downstream from culture. Well, we've already seen where corporate culture is headed. They see how this is a good financing tool. It has been The market has been digesting it. It has been craving more of it. And so I think the next sort of natural step is for the government to start taking advantage of this as well. And we've emphasized in the past a kind of first mover advantage for a large government. El Salvador already has a digital Fort Knox. President Trump has ordered the United States create one as well. And once the US government really takes steps like this, other countries will inevitably follow. It becomes a self-fulfilling prophecy, like Satoshi said. You might want to get some Bitcoin just in case it catches on. Well, it has caught on. It's gone from a value of zero or a penny to $85,000 per Bitcoin. It, of course, had been over $100,000. It will get back there very soon. I'm confident that once the demand for Bitcoin starts to outpace and even double or triple the number of new Bitcoin being entered into circulation every day, we're going to see much more price appreciation. On the risk side, I think the only theoretical risk here really is, Bitcoin going to zero, but I think that risk has come and gone. There will only ever be 21 million Bitcoin. Its supply cap, its decentralized nature differentiate it from all other assets. It is like a digital precious metal, except you can store it, transport it anywhere in the world in moments. So it's even more useful and even more secure, and the supply cap is even harder. So I think this is a wonderful idea to get our debt under control, to help the US balance sheet become stronger, and for American families to get risk-free exposure to Bitcoin. I agree with your characterization that it could be a win-win-win. And there are different models for this. I think you've looked into different ones. This is the most recent one presented at the summit. I find it very compelling. But you could reduce the amount of Bitcoin purchased with each bond. You could increase it. There are different ways you could do it, that you could manage that risk. But I think this is a really compelling idea that I hope the administration seriously takes a look at.
Hope so as well. And we talk about it being a win-win-win. Let's talk about the three winning categories. If you're the Treasury Department, you win because you can issue debt for significantly less. If you're the American people, you win because you're finding a budget neutral way that saves taxpayers money over the course of a lifetime to stack the strategic Bitcoin reserve. And if you're a bond purchaser, you win because you get risk-free exposure to Bitcoin. And Brian, you touched on the risks involved with this. Of course, every policymaker wants to know what the worst case scenario is. And as you and I have talked about at length on this podcast, it's extremely unlikely that Bitcoin's going to zero, just given how much staying power it has, how decentralized it is, and how lindy it's becoming over time. However, let's suppose in a world that you and I can scarcely imagine that Bitcoin does go to zero. What are the risks involved? Still, they're minimal. Consider that if you were to issue just one tranche of these loans, let's say that $2 trillion debt offering were to work, and 10 years later, Bitcoin does go to zero. Well, what has the government lost? Actually, the government hasn't lost anything because it's only saved money by being able to issue those bonds for less. And what have the bond purchasers lost? They've lost essentially nothing because all their full principal on their investment is returned, plus the 1% yield that they get on their BitBond. They just won't receive any return in Bitcoin at the end. But you also would take into consideration their opportunity cost risk. Other than that, though, they literally do not lose anything. And so no matter what happens with Bitcoin, it's worth trying just because the risks on this are pretty minimal. However, that being said, something that we talk about a lot in our industry, and a point we're keen to emphasize, especially when we talk to US lawmakers, is that Bitcoin isn't a threat to the US dollar. I'm curious your take on this, though. If we start to link treasuries with Bitcoin in some manner, does that undermine that talking point that we have that Bitcoin isn't actually a threat to the dollar, when the very appeal of these US Treasury notes would be the fact that they are linked to Bitcoin?
No, I think it is saving the dollar, because, for example, if you take that 700 billion over 10 years, if you take that number to be true, then we're talking about that's the price of the financial crisis bailout. That is two or more times the price of everything we spent on the Ukraine war. That is, it's half the price of the Tax Cuts and Jobs Act and all the economic growth that spurred because of that. And remember, after the TCJA, government revenues actually went up. So the number is large enough to make a real difference in the strength of the dollar. I think it's actually helping to rescue the dollar. And you've actually put it well in the past as sort of barbell strategy, where you have Bitcoin making the asset side of the balance sheet stronger. And then if you pair it with stablecoin issuance and really dollarizing the world and creating a deeper liquidity market for treasuries, uh, you're actually making the dollar much, much stronger. So I think it might seem a little bit counterintuitive, but I think this sort of idea actually strengthens the dollar rather than threatening it, because it would make the US government's financial condition that much stronger.
That makes sense. It's like throwing the dollar a lifeline in this situation. I can definitely see that. Also, Brian, I know that when you were at Treasury during your tenure there, you worked a lot on century bonds and 50-year bonds, bonds that have a much longer maturation. And I'm curious because that idea really started to gain traction under Secretary Mnuchin's tenure. And I know you know a lot about that subject. Ultimately, the idea didn't come to fruition, though. But I think having had that experience, it gives you a good inside look of the odds of Treasury and Congress getting behind an idea like BitBonds. Can you tell us first a little bit more about century bonds and that unconventional idea? And given your experience there, can you tell us what that might tell us about BitBonds and the possibility that the US government could embrace these?
Sure. I mean, I think at that time we were more looking seriously at the 50-year bonds than the century bonds. But the point was to extend out the terms, uh, particularly I think at that time when interest rates were lower. If the president and the administration succeed in driving the rates lower back down to the 2% or 1% or uh, thereabouts. So you have much lower borrowing costs, and then you can lock those in for 50 or 100 years, then it makes the US debt a lot more sustainable, not sustainable, but more sustainable, and puts a lot more trust in Treasury, sort of shores up the value proposition there as a risk-free investment, risk-free rate of return. Um, I see these as potentially falling into a similar basket of de-risking US debt. Um, but $36 trillion is a terrifying number, or it can be if we don't do anything about it. We're at like 125%, I think, of GDP. Countries historically who have reached that level of debt to GDP have a very hard time recovering, have a very hard time avoiding things like hyperinflation, which then, of course, as we've discussed, leads to asset holders getting richer, people who live paycheck to paycheck getting poorer, and then you have societal problems. So I think that they need to look at multiple ideas for getting the debt under control. I think BitBonds are a really compelling one. I think extending out the time frame for bonds is another one they should look at. We never got it across the finish line in the first administration. Um, if I had to guess, I think President Trump may see that as a bit of a missed opportunity. I don't think he'd want to do that necessarily with rates at 4.5%. But if they get back down to 1 or 2%, I think that would become much more of a viable option. And he seems to be moving at the speed of, I don't know, the speed of light, I guess, with the way they're rolling out new policies. So I would expect that if rates do come down in a very meaningful way, that I think longer term bonds are going to be a real possibility that they pursue, I think, this time around, and that maybe they'll actually get it across the finish line.
Which would be amazing. It would allow us to lock in those low rates for an extremely long period of time. Let's hope that we get there. So this presidency, I've described it to friends and family as the "you can just do stuff" presidency. You can just do stuff is a pretty popular meme in the tech world right now. It's the idea that if you're a high agency person, all it takes to accomplish your goals is convening with other high agency people and using your willpower and using your meme magic to get those ideas across the finish line. A really good example of this, I think, is Nick Carter. Nick Carter coined the term Operation Choke Point 2.0. It became a meme of sorts, but it was a meme very much backed by reality to describe the systematic debanking of crypto and other tech companies across the United States by the US government. So that makes me bullish on the prospects of BitBonds during this presidency, and also potentially century bonds or 50-year bonds as well, because if there's ever an administration that's open to new, fresh ideas, ideas that defy the consensus and go against the mainstream establishment opinion, then it's this presidency, the Donald Trump presidency. Donald Trump himself is a human being who embodies rebellion in some ways and going against the grain. The man's been calling for tariffs for the past 40 years. It's not a new idea from him. It's something he's espoused as one of his core political beliefs for 4 decades now. So that makes me bullish on the prospects of BitBonds and other alternative, unconventional ways of financing our debt. I'm also bullish on Bitcoin over the long term because it seems very clear to me that the Trump family is very serious about their commitment to Bitcoin in the digital asset space. Last week, or the week prior, actually, we talked, Brian, about whether Trump's embrace of Bitcoin was a pure political calculation or if it's something that represented a real conversion by the Trump family. We have more evidence this week that it's actually the latter. In a New York Times story, we've seen that the 2 Trump sons, Eric and Don Jr., have they've started their own crypto venture, in addition to many other crypto ventures that they've since been affiliated with, called American Bitcoin. American Bitcoin will be a Bitcoin mining company. They're collaborating with a company called Hut 8, a pretty prominent Bitcoin miner in the space, in order to get this company off the ground. They'll serve as strategic advisors. Brian, there's a lot of crypto news out there. So much of it is noise. Sometimes, though, some of it is signal. I'm curious if you can see any signal in this recent development or if this is just more noise in the Bitcoin space.
Well, I look, experienced operators of a Bitcoin mining enterprise are going to continue to run this business. So on the business side of things, I don't know that there's a profound impact, but the real signal here, as you put it, is that the Trump sons are putting their money where their mouth is. And in an interview on Fox Business, Eric Trump highlighted the fact that people really do want alternatives to the legacy financial system, that it's not working that well for everybody, that there is kind of bureaucratic morass involved. There has been political discrimination, like Operation Choke Point. He highlighted a couple of large financial institutions that were debanking Trump people, himself included, Melania, Barron. A number of the president's political organizations were debanked. I recall very clearly when Don Jr. was supposed to headline a political event, I believe for a PAC, and I think it was one of the large banks that ended up closing that account, or at least there was enough disruption so that they couldn't sell tickets to it, and they ended up having to cancel the event. So they've experienced debanking themselves. They know Operation Choke Point was real. Of course, we do as well, given the industry we work in. And so people really do want to take charge of their own financial future. And I think the Trump sons getting involved in this business really adds credibility and credence to the fact that the Trumps want to foster innovation. They want to see alternatives. They want to disrupt this system that has not been working that well for everybody, themselves included. So it's a signal that, the Trump family, of course, with President Trump running the government, I think that's a signal that this industry is going to be taken seriously, that the bureaucracy is not going to be able to just steamroll over us anymore, and that the United States sees the strategic value in this type of innovation. So I'm glad to see them. Welcome. The water is warm. Come on in. And I think it's a great sign that our industry is going to thrive, I think, under a Trump administration, especially with them actually getting involved in it. It shows that they actually see the business case for it, more than just the public policy case that their father obviously sees, but they now see, as very astute businessmen, they see that this is an area for growth. This is an area for innovation and for individual empowerment, which I think is really part of what the family and of course the administration is aiming for. It's just a little bit different from what the president has been talking about in banning CBDCs. They repealed SAB 121. They launched the strategic Bitcoin reserve. So he's done all of these things in the public policy space to show that he actually wants industries like this to thrive. He sees the value in it. And now I think his sons being excellent businessmen in their own right, actually getting involved in the industry, I think should be very promising.
Very promising indeed. I think oftentimes public figures will signal just how committed they are to the Bitcoin space by, of course, their investments, but also owning Bitcoin mining rigs. Ted Cruz, I think, is a good example of that. He is one of the most true blue, or I guess you would say true orange Bitcoiners in Congress, and he mines his own Bitcoin at home. I think this sends you a similar signal with the Trump family getting involved with Bitcoin mining itself, that the Trump family is truly converted to Bitcoin and the idea of decentralized finance, having been victims of debanking themselves. So, Brian, we also talk a lot on this podcast about ways that the Trump administration is thinking outside the box when it comes to stacking Bitcoin. Of course, at the beginning, we talked about BitBonds, and budget neutral ways to acquire more Bitcoin. There's a really interesting idea that's kind of been floating underground recently about mining Bitcoin with hydropower and the US government using that as a way to stack more sats. I am not as familiar with the idea though, but I know that you are fairly well versed on it. Can you give us a little more insight into what that idea is, mining Bitcoin with hydropower?
Sure. Well, first I'll zoom out a little bit. The U.S. government owns a tremendous amount of land, and it owns a tremendous amount of energy-rich land. And so the Trump administration has been focused a lot on issuing licenses, for example, to oil and gas companies to explore more federal lands, to reach agreements, to kind of share profits and maximize value for both taxpayers and for private companies that can be very helpful. So public-private partnerships. Um, so that, and we know there's ways to mine Bitcoin, of course, co-locating it at power generation sites. The Army Corps of Engineers actually has a hydroelectric program where they own hundreds of sites. Of course, the Army Corps, I think, is probably most famous for building dams, and they have, like I said, hundreds of hydro sites. They're tens of gigawatts, which just to, I mean, put that in perspective, a 1 gigawatt site like the Riot owns is probably the biggest by multiples, the biggest Bitcoin mining site in the world. Now looking at HPC and AI uses for some of that power, it's a massive amount of power. It could power, a probably a small city. I haven't done the math on that, but it's a tremendous amount of power. So that's 1 gigawatt. The Army Corps owns tens of gigawatts that could power, practically entire regions. And a lot of it is underused or not used because maybe there isn't sufficient transmission infrastructure, distribution infrastructure, but there is a lot of power that is not creating value in the way that it could. So I think the idea is to, in similar ways to the way government can monetize energy-rich land or other assets, they could potentially start to create value from some of the hydro assets that it possesses. And it could do a similar model with licenses with private companies who could come in and start using that electricity to mine Bitcoin. And it could be mutually beneficial. If there's enough power and you can get enough rigs hooked up, you could potentially be, and if the price of Bitcoin continues to appreciate, which we think it will, this could end up being a win-win for the government to be able to stack sats using assets that it already owns and sort of do a profit sharing arrangement with Bitcoin mining companies so that all parties are benefiting because you have essentially unused or virtually zero cost power that you could then be converting into a very valuable commodity, an asset. So I think that's kind of the idea. This is a reservoir of energy that America could use to stack sats and that American companies could likewise use to stack sats. And it could be a public-private partnership situation that could really create a ton of value out of things that are currently, I think, being underutilized. It's currently inefficient. So I think in the name of government efficiency, um, this could actually be public and private sector efficiency to start monetizing those assets.
Wow, 10 gigawatts is an absolutely mind blowing number. And like you said, to put that number in perspective, Riot owns one of the largest, if not the largest, Bitcoin mining site in the world with 1 gigawatt. Now, times that by 10, that's how much untapped energy exists out there.
Well, I
That's,
think it's tens, plural.
oh,
I mean, I've
tens.
heard different estimates. Our friend David Bailey at Bitcoin Magazine, I think he was estimating like 18 gigawatts. I was poking around the Army Corps' website last night. I think it's even more than that, actually. It's multiple tens of gigawatts, which is just a colossal amount of power that I think is being underutilized.
That's absolutely astounding. Oftentimes, people who are Bitcoin skeptics, they say to me, "What is a Bitcoin? I can't see a Bitcoin. I can't handle it." I try to tie it to the real world for them. Wherever there is untapped stranded energy, there exists Bitcoin. It's something that can be converted into Bitcoin. And to conceive of 18 gigawatts of power, potentially even more, that the US government could leverage to mine Bitcoin, we would truly become the Bitcoin superpower of the world. That's a really, really interesting strategy. I hope that develops over the course of the next few years. Well, let's shift next, Brian, to the strategic Bitcoin reserve. There's a lot to talk about on this front. Just last week, our CEO at Riot, Jason Less, hosted a conversation with Senator Lummis and, of course, Michael Saylor of MicroStrategy, now called Strategy. And they talked about the topic du jour, which is the strategic Bitcoin reserve. And he posed a really simple question to both Senator Lummis and Michael Saylor. That question is, why do we need a strategic Bitcoin reserve in the first place? They both had really good takes on this question, but gave different answers, each with their own unique angles. Let's look at what Senator Lummis said first. She made a really good point. She said, we have a strategic oil reserve. We have a strategic gold reserve. We even have a strategic cheese reserve. So why not a strategic Bitcoin reserve? In addition to that very basic logic, she explained the many economic benefits that come from being a first mover on a brand new technology like this. She also delved into the ways that Bitcoin could potentially halve the national debt over the next 20 years or so. So, really interesting answer from Senator Lummis. Potentially even more interesting answer from Michael Saylor, though. I don't know if anyone has heard Michael Saylor speak live, but man, that guy can motivate you. He can get you fired up. He can get you to whip out your phone and buy more Bitcoin on Coinbase or whatever app you use in the moment, because he is a true believer in Bitcoin and makes you want to run through a wall for the cause. And in this specific context, he talked about the way that Bitcoin is national security. Let's give that a listen.
Superpowers are defined by literally power: naval power, land power, air power, nuclear power. The British proved that. The Romans had to beat the Carthaginians and prove that. John D. Rockefeller gave the United States the majority of all the chemical power in the world. That's why we won those wars. The 21st century is digital. Bitcoin is digital. It's a digital asset, digital property, a digital network. It's a digital shield. It's a digital defense system. There's only one of them. Only one country can control it.
And that one country that he wants to control it is, of course, the United States of America. So he talks in his speech about Bitcoin as a form of digital power, a digital shield, a digital defense. We often talk about Bitcoin in economic terms. Here, Michael Saylor, though, is talking about it more in military terms. Brian, I'm curious your take on Michael Saylor's take. Do you see Bitcoin as national security? And if so, in what ways?
Well, look, that value is going to be captured somewhere. And like I said, when there is more demand, twice or three times or 10 times as much demand as new coins being entered into circulation, that number, the value of a Bitcoin is going to go up. Where is that value going to be captured? I hope it's captured by the United States, because if it's captured by our adversaries, economic strength begets military strength and begets world influence. And so if China or Russia or Iran or North Korea or whoever else ends up capturing the lion's share of that value, we may see in 5, 10, 20 years from now, a new kind of superpower emerge. We want the United States and our values, our open society to be uh, remain a beacon of hope, a beacon of strength, a pillar of Western civilization and the advancement of humanity. So if you're going to do that, we should capture the value. We should prevent our adversaries from capturing the value. There will only be 21 million Bitcoin. He frequently cites, the Louisiana Purchase, Seward's Folly purchasing Alaska. Most of the United States was purchased for like $40 million. That's worked out pretty well for us. We wouldn't have Silicon Valley otherwise. We wouldn't have, as much as President Trump says, liquid gold as Saudi Arabia, which we do. So acquiring those assets has led to our ability to win two world wars and defeat communism in the Cold War. We need to capture the value of the next generation. I think that is Bitcoin. And so this really is a longer term strategic vision. I've heard many interviews recently, people talking about how, for example, China is planning in 30-year increments or 100-year increments. In the United States, uh, really plans like quarter to quarter, earnings call to earnings call in our capital markets. We need a longer term vision. I think this should be a piece of that vision. It's going to help the United States remain a superpower and prevent our adversaries from becoming superpowers.
That's really well put. And as you pointed out, our greatest land acquisition was the Louisiana Purchase. We arguably purchased more land by buying it as opposed to conquering it. And I think there's a similar analogy here that in the same way that some companies are implementing a Bitcoin treasury strategy, they're buying more land, so to speak, as opposed to trying to defeat the competition in more direct ways. I think there's a real metaphor here in what could be potentially happening with Bitcoin right now. That's why he calls it the Louisiana Purchase moment. There's a lot of action happening in the States right now with Bitcoin reserves. Foremost among them is Texas. Brian, you actually wrote a letter to the editor in the Dallas Morning News just last week about why Texas should have a Bitcoin reserve. If you could pull up that article, Dylan. So this article talks a lot about the potential benefits for the state of Texas by investing in Bitcoin. Not a lot, but a fair amount of public funds could be devoted to buying a Bitcoin reserve here. Brian, we've talked at length on this podcast about why nation states and sovereign wealth funds should consider a Bitcoin reserve. Can you tell us more about this article you wrote and make the case for states also having a Bitcoin reserve?
Yeah, well, it was a little bit in response to an editorial that said they shouldn't be using Texas taxpayer dollars to invest in, volatile assets like cryptocurrency. I think that betrayed a fundamental misunderstanding of Bitcoin because, as we've said, over its lifespan, 15, 16 years, it has generally gone in one direction, that's up and to the right. And when you compare that to the purchasing power of the US dollar, which is the riskier asset? One of them has decreased in value by over a third in just the last decade, about 25% in just the last 5 years. The other has increased over the last decade by about 37,000%. The former is the dollar. The latter is Bitcoin. So tell me, what is the riskier asset for holding your money? Is it a dollar or is it Bitcoin? I think if look, Texas is a state that leans in, that likes to be forward thinking, that wants to be a hub for business and innovation. And this is the right signal to send to start a strategic Bitcoin reserve for the state to hedge against uncertainty, against inflation, against spending from Washington that Texas can't necessarily control. They can start to protect themselves as a state. If it stood alone, Texas, I think, would be the seventh or eighth largest economy in the world. So it is a substantial ecosystem. And I think it wants to remain strong. And I think investing a very modest amount right now compared to its overall budget, it would be a drop in the bucket, could have a payoff that would last for generations and really strengthen the state. So I'm very pleased that this bill passed the Senate, that they didn't necessarily listen to editorial boards that I think were not very well informed on the issue. And they seem to be pushing forward. So we're here to cheerlead and to help them come up with the best way of doing this. and to generally lend our support, because I think the elected leaders in Texas are on the right track here towards probably establishing a strategic Bitcoin reserve in this legislative session over the next 2 months or so. So very pleased that they're going to do it. I wanted to defend those legislators because I think their idea is very good against some, I think, misinformed attacks from the editorial boards.
Yeah, and I think it's very forward thinking as well, because America's been behind the curve when it comes to sovereign wealth funds. Other countries really beat us to the chase. Norway is a perfect example. They have, I believe, one of the biggest sovereign wealth funds in the world. And they came around to the idea decades ago. Whereas the United States, I think we rested on our laurels thinking we didn't need a sovereign wealth fund. Thankfully, we have Howard Lutnick at Commerce and President Trump who recognized the merits of creating one. And I think states are seeing the model that other nation states have used, and they're recognizing that they should create something similar to their own sovereign wealth fund, but a state wealth fund. Wyoming is a really good example of doing this. Senator Lummis, actually, her inspiration for creating a Bitcoin reserve was pulled from her time as the overseer of the Treasury in Wyoming, where she created what essentially was a state wealth fund for the state of Wyoming and helped it come to better financial footing there. And so I think Texas is taking notes. They're implementing something similar with the Bitcoin reserve, and that's a really promising strategy. And I think you articulated a really good argument, both on the podcast just now, Brian, as well as in that letter to the editor. And the Dallas Morning News, they need to hear that, because it's really hard to penetrate the legacy media space with anything remotely positive about Bitcoin. But little by little, we're making inroads there. So that about covers a lot of our policy content for the day. Of course, we always end our episodes with a grab bag section. Brian, do you want me to start grab bag, or do you want to start? I'm good either way.
Yeah, why don't you kick it off?
Yeah, so I'll kick it off by making the case for why I believe in Bitcoin. About 2 years ago, really little over 2 years ago, I started writing full time in the digital asset space. I became a Forbes contributor, and a lot of my articles focused on policies that could advance digital assets down the field. That led to an opportunity, one of the greatest opportunities I've ever had in my professional career, to join Riot and to join Brian here and to start working in the Bitcoin policy space. When people asked what I did for a living, it got mixed reviews when I told them that I worked for a Bitcoin mining company, because it's one of the most polarizing assets to ever exist. Some people thought it was the coolest thing ever. Some people thought I was destroying the earth and that I was throwing my career and my future behind magic internet money. However, I think the past couple of years have really shown that Bitcoin is here to stay, that this technology is here to stay. And I just want to share with our listeners what my logic was from the get-go, why I believed in Bitcoin back then, why I believe in Bitcoin in the future. And this is a brief discussion about the nature of technology. So almost all world-changing technologies don't start as world-changing technologies. They start looking more like toys, like playthings, like things that are so inconsequential, they'd never have the potential to disrupt the world in the way that we live. Here are 3 examples that I like to point to. The first one being gunpowder. What was the first use case for gunpowder or black powder? Well, it was discovered by the Chinese. They actually used it for firecrackers. And from firecrackers, it became pyrotechnics. Fireworks was the initial use case, so to speak, for gunpowder. It was a toy. It was an entertainment device. It was something that nobody thought would change the world. Yet lo and behold, the way technology evolves is such that it became later on the howitzer. So I think the howitzer is one of the most perfect examples of the potential of gunpowder and the damage it can bring about, and the way it can disrupt not only the battlefield, but the course of history itself. Now let's talk about another example, the wheel. Interestingly enough, when the conquistadors settled in the Americas, they brought the wheel with them. But the wheel didn't exist in any meaningful form in the Americas when the European settlers arrived here. However, wheels did exist on small toys, on small playthings. But what the ancient Americans didn't realize was that the wheel had so many use cases that go just beyond little toys. And now, of course, today we have the culmination of the wheel in inventions like the Cybertruck, which I think is one of the most dynamic, beautiful cars on the road today. So you can see a very clear evolution there from what seemed like a toy at first to being something that with a real use case, with something that has real potential to change the world. And then the last example, this is, I think, the most topical right now, is drones. How did drones start? They started as RC helicopters. I remember as early as the 1990s, my dad got for Christmas a remote controlled helicopter. It was just a mini figurine. It was a proto drone, so to speak. And what are drones used for today? Not just FPV drone racing, not just recreational photography. These are military instruments that are completely changing the battlefield and the nature of warfare itself. I think it was really telling when Donald Trump spoke at the Bitcoin conference in Nashville last year. He was still pretty early on in his Bitcoin evolution. And if you remember how he ended his speech, Brian, he said, now go out there and enjoy your crypto and your NFTs and your Bitcoin or whatever else you're playing with. I think it was a subtle admission there that he still wasn't quite ready to take the whole industry seriously, which is fair. I don't take the whole industry seriously. I take Bitcoin very seriously, though. And I think the reason why a lot of people don't take it seriously is because it started out as something that looked like a plaything. It started out as a currency for online gamblers and cypherpunks and people buying drugs online. It didn't seem serious at first, just like so many world-changing technologies before it. Now, fast forward to today, Bitcoin is backed by Wall Street via the Bitcoin ETF, which was the most successful ETF launch of all time. Bitcoin is now becoming a matter of nation state policy, with countries like our own creating strategic Bitcoin reserves. And as we talked about today, Bitcoin is now recognized as a financial instrument that could potentially either significantly reduce the national debt, or if that BitBonds idea comes to fruition, could potentially even eliminate the national debt altogether. People are recognizing that Bitcoin is so much more than a toy. It is here to stay. It is a disruptive financial instrument. It is a world-changing technology. And that's why I believe in Bitcoin. That's why I love Bitcoin in the Bitcoin space. It was a big bet, Brian, when you and I joined this space a couple of years ago, but that bet has definitely paid off. And I'm so grateful for the blessing which it has been to be involved with this industry, to work at Riot, to be a part of the P2P Policy Podcast. And all of that is attached to another announcement that this is actually my last episode of the P2P Policy Podcast. I will soon be moving on to a job with the government that you'll hear about more on social media in the coming days. And I'm really excited for this new role. And I'm really excited for the opportunity to continue advancing these ideas that I believe in. And Brian, I wanted to thank you. I wanted to thank Riot and just all the opportunities I've had here. I want to thank Dylan, our producer. He is the unsung hero of this show, who week in and week out helps us meet tight deadlines and helps us get our media up there. And he's just been a huge pleasure to work with him and everyone else at Rumble. And I just wanted to end my time here at the P2P Policy Podcast with that quick monologue on why I believe in Bitcoin. So Brian, thank you. And over to you.
That was a great rant. Yes, and congratulations, and we will miss you, and we'll be rebooting the peer-to-peer policy pod in the coming weeks, but we will miss Sam. And so in that vein, I wanted to use my grab bag segment to run through some of the greatest hits, some of them prognostications that came through, other things, just really good insights. So just sort of a highlight reel. So Dylan, we can kick it off with the first graphic there. So this is back in 2023 when there was a Wall Street Journal article that got criticized relentlessly for its sort of misleading nature, claiming that after the October 7th attacks by Hamas on Israel, that they were really funded by crypto, which was absolutely untrue. There was some data that was totally misinterpreted. And so Sam wrote an article about how that information was being abused and misappropriated. And that ended up getting tremendous attention, really helped educate members of Congress and helped to kind of correct the policy trajectory there. So that was really great work. The next one, Dylan, is there it is from 2024. You actually foretold Biden's exit from the race using your experience, having worked for Senator Orrin Hatch, who knew he was a tremendous senator in terms of how productive he was and in passing good legislation. But he also knew when to quit and when to pass the baton to the next generation. And I think, your article, I think, was very well received, and that actually sort of foretold what was going to happen, which is Biden dropping out of the race. So the next highlight reel moment, that was an article that we wrote together about how debanking really was tied to the Trump administration's effort to have Bitcoin, the crypto industry, now AI, kind of getting into it, and how public policy can shape how the U.S. economy can thrive into the future. And so that now seeing the Trump family's own statements as to why they believe industries like Bitcoin mining are profitable and good investments, I think that all kind of ties into it. So I think that was a very good to-do list that we wrote in The Hill, a very widely read publication on Capitol Hill, and sort of gave our policymakers a roadmap to follow. And they've been doing a pretty good job of that. The next highlight, Dylan, this was now you and I each wrote different articles and kind of took different angles about how Bitcoiners were going to have a role in the electoral process in 2024. And I think we were right. Look, we launched the Bitcoin Voter Project. We showed that there was a whole generation of voters out there who were not loyal to a party. They're younger, they're across demographics, they're across party lines, and they wanted alternatives to the legacy financial system. And if a candidate like Trump started speaking to them about these issues, you were going to get a whole new voting bloc showing up and potentially making the difference in swing states. And so I think you kind of foretold that with your article and mine in another one. And so I think we actually we were kind of oracles on that one, and we were proven correct, I think, by the election outcome. So that one was very satisfying. What's the next one here? Yes, the game theory driving nation state Bitcoin adoption. Sometimes cynics distill this to the FOMO argument that, well, if somebody else has it, we have to have it. But it really is, Bitcoin really is a powerful tool because it's supply capped, because it's decentralized. And if a nation state like the United States, President Trump already ordered a strategic Bitcoin reserve for the United States, I think that is going to drive further nation state adoption. We've already seen corporations adopting Bitcoin treasury strategies. I think we're going to see countries adopt it as well. And I think you very accurately foretold that issue as well. What else do we have here, Dylan? And there we go. We
Wow,
have
that was fun.
you doing great work on the state level as well, not just in these sort of global geopolitical high-minded strategic issues, but we engage in a lot of grassroots issues as well to make sure our businesses can thrive, to make sure the communities where we operate understand it, that they see the economic growth and the benefits. And so getting to meet with state and local officials like Governor Abbott, who has been a fantastic governor of Texas, very forward-leaning, very friendly to business and innovation, and he's been a tremendous advocate. So getting to talk to him on our behalf, I think was great. Wanted to highlight that. And do we have any more, Dylan, or did I get through all of them?
I think that's it.
That may have been the last one. All right. Well, so that's just a little bit of a highlight reel. You've done tremendous work over the last couple of years, Sam, and I think we've helped to position the company and the industry in a really positive light. And I think we've done a decent job of entertaining and educating our audience here at the Peer-to-Peer Pod. So I wanted to give you your flowers and say, great job. It's been a lot of fun. And of course, we'll remain friends and colleagues. And if you are going to leave me in the pod for any particular party, the only one I'm comfortable with is the United States of America. So I am very happy that you will be returning to public service. But so any closing thoughts?
No,
Or
I just
victory
want to
lap?
say, yeah, thank you again. I mean, I guess my closing thought is I always thought the job I would love the most and have the most fun with was the job I started my career with, being a speechwriter on the Hill. But man, being involved in the Bitcoin community, being involved with Riot has been an absolute blast. And I honestly think it's been the funnest job I've ever had. So it's really hard to leave a job that you love, but it's been just a tremendous experience. And Brian, thank you for everything to help champion my career, help push these issues forward. I mean, I've learned so much from you over the course of this podcast, over the course of working with you at Riot, and going forward, I know I'll continue to just learn so much from you. So thank you. Thank you to all our listeners. Stay tuned for season 2, a brand new cast member coming on. He's an awesome guy. His name's Zach Whiting. and you're going to love him. So thank you guys for everything. Don't forget to follow us on Twitter at MorgensternNJ, at Sam Lyman 33. And please like and subscribe to our pod. If you didn't like it, just move along. Thank you for your attention all the same. And we just have really enjoyed this episode. And thank you, everyone. Anything else, Brian, or does that about sum things up?
Season finale. Thanks for watching. We will see you on the next iteration of the Peer-to-Peer Policy Pod.